Hey everyone, checking in on the market today. So the bears continue to keep their complete control as we have the S&P 500 dropping to lower lows, but there is definitely a mix-up going on right now. And for me, the way that I visualize it is the FOMC shakes the snow globe of the markets, and right now and into tomorrow, we're watching how all the little flakes fall and how things settle, because there's a lot going on under the hood as far as I mentioned yesterday with individual sectors doing very different things right now. And so we can't just say the market. I mean, we can say the market is weak the last few days, but again, there's names out there that were green today and had a solid day. So let's break it down as far as who's stronger, who's weaker. But one thing that notably stood out to me today was growth names, which generally are the higher risk, higher reward names in the market. They were leading the bounce this morning, and they held on much stronger than big tech. And that's a little bit backwards. You know, for so long, big tech has been strong and trustworthy and sturdy, and you stick it in your IRA and it's just fine. And, you know, growth names have been, oh, that's risky, you know, small caps. So it's interesting to see that in the bearish environment post FOMC reaction, that it is growth names that are standing out a bit stronger. And just to show you your cryptocurrency space right now, I mean, crypto altcoins are one of the most highest risk, highest reward assets in existence. And you look at the side here, and we've got a bunch of names up 3 to 12%. And so these names are doing really well post FOMC. They dropped down with the rest of the market, but they've had a lot of buying on these V-shaped bounces since the lows of the reaction to FOMC yesterday. So it's very notable to me that we're seeing the strength here in the cryptocurrency space, not necessarily in Bitcoin. Bitcoin's just holding on sideways, but these higher risk altcoins are showing us strength. So that's one place where we are seeing the strength. The S&P 500, we lost the daily uptrend, so clear weekly lower high has been set, and the only way that the bulls can save this is holding the low and then breaking that high where we came from to confirm a weekly uptrend. The size of the pullback at this point is now creating space for, too big a line, is now creating space for a daily lower high to be the result of the next bounce. So we're looking at what a bear wants to see is, all right, we got to win. And if we're going to head back to the low, we likely will have to confirm a daily downtrend at some point if we're going to see the bears follow through enough to head straight back to that low. So a bear says, great, we lost the uptrend. And you look at this now and say, are we in an uptrend or are we in a downtrend? We're not in either anymore. We lost the uptrend. We have not confirmed a downtrend. So if I'm a bear, the next thing I want to see is the lower high and lower low as the result of the next bounce. It's clearly the NASDAQ leading the way down. It is on the verge of breaking that low. And that would be a weekly bear flag confirming off of an EMA 12 resistance rejection. And it's just these big names that are in free fall. You look at Google post earnings. It's a falling knife. There's no bottom right now. We have increasing bear volume. We have a close at the low of the day. Essentially 6 out of the last 7 days post earnings. We're hitting daily oversold, but again, it's just free fall right now. So there's no confidence in a lot of these big tech names. And we're heading back to 84.70 support broke. So now we're looking down at 75.42, but just a clear downtrend and watching to see if we get to weekly oversold, because historically weekly RSI getting at 30 or just under 30 has been the time to buy Google in its existence. So we'll keep an eye out on that, because Google weekly RSI is getting towards historical bounce zones here. But again, for me personally, I'm not interested in catching the falling knife of big tech right now, because there is strength elsewhere, or at least more strength. So Google's dumping, Amazon's a falling knife. Starting to get a little interested in Amazon. The daily's getting crushed, the weekly, not quite oversold yet, but as I mentioned recently, if that monthly gets oversold or right down to it, that's when I get interested. But we're heading back. 81.30 is the next support. We actually have a support from after hours earnings reaction at 87.59 coming into play. But again, it's a falling knife. Just 3 days, big drop, daily RSI getting pretty beat up. And again, this is why I'm looking for the S&P 500 to see a daily bounce rather than just keep dumping, because we're going to get a daily oversold bounce in these big tech names. We're going to look for a daily lower high to be the result of that bounce, but we're getting real extreme. Apple was a lead bear today. This is another scenario where Apple was a relative bull in the tech name in the tech space post earnings because it's one of the only names that had a bullish reaction to earnings, and it went from relative bull to laggard bear. And over the last 3 days, it's dumped just as much, if not more, than all of these other names. 11% drop in 3 days, which is massive for a name like Apple with the size of its market cap. It's in line with these other big names. Amazon a bit weaker, 14%. But you get the bottom line here is big tech is real weak. Microsoft back to free fall. So again, all of the generals of the market that have the most importance and that have been holding up for so long are dragging it down right now. So big tech easily the weakest that we're seeing. As far as strength, let's just go right to that. So IWM, granted it was red today by closing under the low of yesterday, but we filled the gap. We closed higher than we opened, and we see it in places like ARKK, had one of the bigger bounces today and was a bounce leader. The biotech sector had one of the bigger bounces today. Cannabis names, CGC, big green day. All of the cannabis sector, again, as high risk, high reward as you can get, all cannabis was green today. So just making note of pockets of green in the face of big red generals. Dollar, strong. Again, the dollar is right off weekly EMA 12. We're heading back up to two resistance levels of 113.94 and 114.78. And that's all we have here. And what we're watching is the weekly EMA 12 continue to hold its support all year. We got a little support level on our daily to be our guide. As long as the bulls hold these higher lows, they keep complete control on the daily chart and heading towards key resistance. A couple other places where we're seeing a little bit of a mix-up. The VIX today. Look at the VIX. I mean, you look at only the VIX and you think, oh, the market's doing real well. You know, the market must have had a bullish reaction to the FOMC. The VIX closed. It's at the lowest level it's seen in months, or at least a month. And it's just not showing us any fear in the market, which is interesting. Semiconductors had a decent bounce today. Again, they didn't do enough to confirm any hourly trend, but you compare SMH to QQQ, and it's definitely stronger. QQQ closed right at the low of the day. And it was a nice 15-minute equilibrium. Bounce, higher low, lower high, higher lows, sideways, bears win the close. Tesla, another name that had a decent bounce. Again, trying to set up an hourly trend change. So there are some names, the names that bounced better on the morning, growth names, and some others, they have possible hourly trend changes on the table into tomorrow, depending on how we open, of course. But again, if an aggressive bull is keeping an eye out for daily bounces to start to shape up on big tech names, but only the most aggressive bulls. And I love playing oversold bounces, and I'm not even sure I'm going to make too much of an attempt. Give me a gap down, and I'll be interested. That's one thing, if you'll note, Amazon is not gapping down on this drop, and Google had a gap down today, but that was its first one. So if Amazon drops like this into that oversold daily RSI and then gaps down, then I'm interested in looking for a little climax bottom. Healthcare, so as I mentioned yesterday, healthcare and the financial sector are going to be very key for me. Can they hold daily EMA 12 and keep this daily consolidation healthy? Again, this chart is a night and day difference between it and QQQ. They just are doing completely opposite things. Well, not opposite. They're doing very different things, and it's a daily uptrend still. And there's no major red flags here. If the bulls can gain the hourly uptrend from here on XLV tomorrow, our daily high or low is set. And we'd be looking back up towards the high here. A bear would love to see a daily downtrend confirmed, but first things first, can bulls set the daily high or low and confirm an hourly uptrend in their favor from here? XLF, same thing. We're on daily EMA 12. There's a potential hourly trend change attempt, but the bulls are going to have to show up tomorrow to confirm that. And if they do, it's still a very healthy daily chart. IWM, middle of the road, so it's pulled back more. Its retracement is bigger, which means there is more space for a daily lower high to be the result of the next bounce. But it too is also in a daily uptrend still. So it's essentially, you've got, the way I'm viewing the market right now is our three most important sectors based on their holdings in the S&P 500. It's healthcare and the financial sector holding on just fine for the bulls. It's IWM in the middle here, and it's QQQ and big tech nosediving. And that's the makeup of the market over the last, I mean, that's been the theme for the last few months, but it's just on full display right now the last few days. Biotech sector, as I mentioned, is watching for a daily high or low attempt. It's another name that's trying to shape up an hourly trend change. Big bounce this morning. We didn't follow through with a trend change. We gave a lot of it back, but that's a 3.5% bounce for the entire sector, which means those ETFs were going double-digit percentages. As I mentioned, cannabis strong. Is CGC a cup and handle on the daily? You could argue for it. The retracement size here is in the gray zone, what I call the gray zone. Ideally, you want the bull flag to be 382 retracement or less for higher probability of continuation. And we retraced about 45%. So it's not ideal, but it is still possible. Essentially, we're not going to break it unless there's news or unless the broader market bulls show up in a notable way. But again, just a very strong day considering everything else in the market going on the last couple days. And I do believe that leading into the votes here that we have, is that next week or next week, that we've got a little bit of momentum here. And you look at TLRY and it's fairly similar. Daily higher low trying to shape up. US cannabis is weaker, but holding support and having a green day today. Again, US cannabis has been red on market green days very often. So to see it green on a market red day, it definitely gets our attention. So continue to pay attention to this sector over the next week. Silver, watching a megaphone here. Watching the megaphone because we get resistance breaks into support breaks into resistance breaks and nothing having any follow through. So here's your resistance break into a support break, and here we are right in the middle. So I'd be keeping an eye on this 4-hour megaphone just for a bit of clarity. We know the bulls have proving to do on silver. We know gold has been weaker overall. But you could look at this and say, well, gold and silver bulls are pleased, well, at least silver bulls are pleased with how they held up today, considering dollar strength. Wow, miners got crushed yesterday. Daily downtrend confirmed. Just another weekly lower high. EMA 12. I mean, this looks a lot like Bitcoin as well. So look at this month-long bounce. Early August rejecting from EMA 12 and then rejecting another 2-3 times. And then you look at Bitcoin on the weekly. There's your bounce for a month plus. Early August, EMA 12, rejecting again and struggling right now. So clearly some overlap there. Energy bulls looking just fine on the daily. Looks like our second highest close of this entire move. Daily support of 87.65 held. So here's another sector where you look at this sector on its own, it's extremely strong. What's utilities doing? Utilities holding up real well as well, comparatively, again. Weekly chart still has a lot of work to do, but it is still holding on. Oil. So oil, got to be cautious of a rising wedge because we broke bull straight into daily consolidation. So I zoom in and I draw a resistance line to keep an eye on. And where is our support line here? Something like that. So potential rising wedge, if this were to break bear, it would be a failure to break weekly resistance, and we would then have a tightening weekly range. Bulls need to maintain these higher lows and break 92.34 to confirm a weekly uptrend. Otherwise, we're going to look for a tightening range. So today gets the attention of aggressive bears watching for a potential rising wedge. Natural gas sideways. We got the 4-hour equilibrium that we were looking at from yesterday, the video. So we saw a move up to resistance, looking for the pullback on the 4-hour. This isn't a good lesson in equilibriums. You can look at this and say, okay, equilibrium tightened up and just broke bear on the 4-hour. And I would not argue with you. I'd say, yeah, that's just what happened. Whenever you see an equilibrium break, zoom out. Because I can then go to the 6-hour time frame from the 4-hour time frame and say, well, if we hold 515, it's a 6-hour equilibrium that just continues playing out. So if you zoom out right away, you could say, okay, check mark, we got our first step to being a bear. But if I'm on the 4-hour time frame and I then say, all right, equilibrium bear break, we're now heading back to the lows, that's going to be overconfident. I have to recognize, okay, this is what I want to see as a bear, but I am well aware that anything above 515 keeps us within this tightening range. And we may have to wait another couple days for this to resolve itself. Did a little bit of trading today, not a whole lot. Played like a couple Apple bounces, got the morning one for a little win, and then stopped out break even on a second attempt in the afternoon. I was away from the computer a good bit this afternoon, so just grabbed a position that could potentially play out, but it didn't. And other than that, chips, semiconductors, they're holding on a little bit better, as I mentioned. So INTC, still in this swing trade, looking for a daily higher low. Did stop out a MARA swing trade yesterday with the weakness on the FOMC reaction, and that was just a break-even stop out from where I had entered. Again, it was a smaller position that I was trying to let play out longer term. So back to a clean slate there. Tons of space for a daily lower high to be the result of the next bounce. And it's the NASDAQ dragging us down here, because you look at this crypto stock and you look at Bitcoin's daily chart, and it's very different. MARA is dumping because of NASDAQ weakness, and we are down almost 35% or so over the last week and a couple days of trading. All right, appreciate you watching. Do good things. About to go live for a webinar here. I don't have any end of video content, so just make sure and do something nice for somebody and take a deep breath and imagine something that you're grateful for. And I hope you have a great Thursday evening.